Okay, so this is the strategy. When a week finish, you go to the daily, wait for the week to finish. At the beginning of a week, of a new week, wait for go to the daily time frame and mark out the highs and the lows. Now, if price break the highs, it means it is bullish. It means it is bullish. If price break the lows, it means it is bearish. Now, another way of knowing a bearish scenario is if yesterday, the previous day, should reject the week of a daily candle, the high of a daily candle. If you should reject the high of a daily candle, is going to fall, is bearish. If you reject the low of the daily candle, is going to be bullish. That is CRT, candle range theory. So once price take out the highs of the previous day and trades back into that particular candle, it is called a bearish scenario. And then the same with the buy. If it trades back into, if it wicks out and trades back into, it is called a bullish scenario. So you get the idea. Now for this particular one, you wait for price to give us either a bearish or a bullish scenario within that same week. Make sure the week is just starting. The bearish scenario or the bullish scenario is just starting for that week. Now, after you've gotten your weekly buyers, which is sell, you scale down. You wait for the next day to finish, for the day that gave the bearish scenario to finish, and then you mark out the next day. And then when you mark out the next day, all you just have to do is just to go to the 4-hour time frame. Now let's go to the 4-hour time frame. And on the 4-hour time frame, what are we looking for here? We are looking for two things. If we don't see these things, you are not trading. Now with a bearish scenario, we have to see a 4-hour rejecting weakening out or rejecting a 4-hour week like this. It has to take liquidity from a 4-hour, like it has to wick out. So it's like a candle trading back into the week. So like it has to sweep, the candle has to sweep, do a liquidity sweep above another candle. So once we have that, that's an indication towards sell. Now what are we not expecting on the 1 hour? Once that happens, you scale down to the 15 minutes and look for a change of character. You scale down to the 15 minutes and look for a change of character. Now once you look for a change of character, all you just have to do is to mark out the first low, which will be liquidity. The first low after that change of character is liquidity, and then you enter from the nearest POI, and the nearest point of interest that you should enter would be either from the open close or from the head. Now our stop loss, our stop loss would be above the week, like maybe 5 pips or 10 pips above the week, the whole general candle, or let's just say 30 pips stop loss. Yes, our stop loss should be 30 pips stop loss. Now our take profit would be 1:10, 1:10, also 1:10. And then when our take profit is 1:10 or more, you can do 1:13, 1:20 something, but for this particular sake of this video, let's do 1:10. Now our take profit is 1:10, and let's extend this. So first you take partials, you move to break even when price is at 1:3. Do you get? You move to break even. Yeah, So you move to break even when price is at 1:3. Let me show you. So price here is at 1:3. Now we move to break even, right? And then we also we move to break even and withdraw partials from this particular 1:3. Remember, withdraw partials 1:3 and also move to break even. Then you move to break even and then withdraw. You then start trading your stop loss when it now reach 1:6. So after you move to break even and all those kind of things, start trading your stop loss when it is at 1:6, and then 1:10 is your full TP. Do you get? So by then you price would have removed 50% of you should have removed 50% at 1:6 and 100% at maybe 1:10. So I think that is that, so that you avoid any loss. So that is that on that. If you gain anything insightful, you can also indicate. But at the same time, your TP can be the next week of the next available week on the daily. You get? That is where your TP can be. So it will be like maybe 1:23. So all you just have to do is just to trail your stop loss.